The Canadian dollar, CAD, reliably plunges down itself against the Japanese yen, JPY, with a value decline to under 77.00. The adjustment in cost since the most recent week is about more than the 10 pips. The cost is confronting an extremely awful stage and ceaselessly battling to return to its ideal level by and by. In the event that we explicitly talk about the present fall, at that point, it is a result of the awful conditions of the international merchandise trade that by the arrival of today announced itself at the cost of $1.47 billion, which is very underneath from the most recent month's figure of $0.73 billion, and it is additionally beneath the business analyst desire for -83 The Statistics Canada distributed international merchandise trade is the distinction in the estimation of its imports and fares of Canadian items short intangibles, for example, administrations. Fair information can give a significant portrayal of Canadian advancement as substantial merchandise and assembling contain a lot of Canada's GDP. In the event that a consistent interest in return for Canadian fares is seen, that would transform into a positive development in the exchange balance, and T should be sure for the CAD and the other way around. To lift itself, it has the guide of help level that keeps it from falling as well as attempts to push it toward the forward, the primary Florida T help supporting it at 78.37 just underneath the cost. CAD-JPY is at this position is stacked with the number of protections that makes the weight from the upper side of the pair's value that not permit the cost to push ahead, as displayed in the figure over. The primary obstruction is the blend of two trendlines at 79.95. Conclusion. The present situation of the CAD-JPY isn't acceptable. So overlooking the exchange rate currently is the shrewd choice, while the individuals who hold the stock may keep it, as the stock can possibly lift itself soon.